Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be asking Steve his take on Apple's earnings from last night and if Apple's stellar numbers can calm the markets. But before we begin, as a reminder, this is a financial education presentation and should not be considered as personal financial advice. Full disclaimer, information is available at ankerstarwealth.com. Well, Steve, Apple crushed earnings again like they always do. Where do you see Apple going from here?
Well, I tell you, the Apple earnings were quite amazing. That is for sure. Some are saying that is the best quarter ever of any company in the history of mankind. I don't know if that's probably a little hyperbole compared to what actually happened in that quarter. But you have to like that they beat on both the earnings, they beat on revenue. Their guidance was a little bit iffy. They did talk about some of the supply chain problems that they're having, but they also talked about the success of every single one of their products except for the iPad, which they intentionally kind of didn't pay as much attention to while they're running with a lot of the other products with the iPhone 13 and the iTags and all of the things that came out in last September, October, which were very popular for Christmas. Now, they also talked about the upcoming suite of products for the iPhone 14. If you can't, believe that's coming already, but there's a whole new suite of products that are coming out, updated almost everything across the board, including the iMacs, which have been wildly popular with the new M1 chip. So really excited about the whole opportunities for Apple out there. And that doesn't even talk about one of the major reasons to invest in Apple, and that's the upcoming iCar, which nobody's really talking about now, except for they've been, 2 years ago, they hired a bunch of automobile engineers to get into the EV space, so electric vehicle space. So when you think of, is Tesla going to dominate this space, or is Apple going to come in and compete? And we're kind of thinking about things a little bit differently now. Instead of individual car ownership, thinking like robo taxis. So like downtown Austin, we have the scooters laying everywhere. Well, eventually, are there going to be a fleet of robo taxis running around to where you pull out your phone and you summon a robo taxi and here comes your vehicle and you take it from A to B and then abandon it again, like we're doing with the scooters right now? I do think that's going to happen. I think there's going to be two major players in that space for those contracts. It'll be Tesla and Apple, and it's probably not coming until 2024. That doesn't seem that far away anymore. So I think this will be the last year where they focus on traditional Apple products, and then as we go into 2023 later in the year, we'll start talking about the plan for the iCar out there. And I do think it is going to be wildly popular out there. As far as what's going to happen with the stock, let's look at the the street celebrated it last night right after earnings, went up to 5% as far as the stock price. And then you can see right here, so it jumped right away, especially while Tim Cook was talking, and the CEO. So it jumped up nicely and it started to fade a little bit this morning. So I think we're going to see the kind of argument between Apple earnings and the overall market, wanting to continue to sell off. So we shall see where it goes. I do think people have to be buying into Apple here. A lot of the price targets were raised this morning to up over $200. So a lot of favorable things out there for Apple, and I'm a buyer here.
And with Apple and other tech companies beating earnings, will this be enough to calm the markets?
I think that's the question at hand is, so Apple beat earnings and, Intel beat earnings and got beat up for it. Other companies, Microsoft's kind of started everybody off with a nice earnings beat. So with the economy, and the earnings, the company, especially coming out of the Christmas quarter that all these companies are reporting on, is that going to be enough to stop the sheer carnage in the markets, right? The sheer sell-off that we've had in the past 3 weeks. And I don't know. I think the jury's out, but certainly I think today could be telling as far as, does Apple hold up and stay in the green all day? Does the NASDAQ, that earlier was in the red and it was in the green, now it's just back barely in the red, as you can see. Kramer talking about it on the screen there this morning. So that's what people are going to be watching today is, can the biggest company in the world, some would argue the best, actually save this market from continuing to sell off even further? There was a really fantastic article out this morning. I have to read this quote to you because it's just too good. And it's about what to do when the market feels crashy. So crashy, right? That's a made up word, but it does, right? We had, a beautiful 2021. And then 2022 gets here, everybody's settling into the new year. Then all of a sudden the market sells off, 10, 12%, even more in some tech firms. It's like, what's going on? How could that be? So this article is written by Mr. Cullen Roche. I love his writing. It's hilarious. And so let me just read it to you again. The article is what to do when the market feels crashy. And it says, a lot of people will overreact during market corrections for one simple reason: they don't have a plan in place. I always tell people that the worst time to discover your risk profile is when you can't afford to discover it, meaning it's already sold off. And we all want the perfect portfolio. That's the portfolio that captures all of the upside and none of the downside. Newsflash, that thing doesn't exist. The NASDAQ is down 14%, the S&P down 9%. Even the gold standard of portfolios, the 60-40 portfolio, is down 7%. Those aren't catastrophic numbers, but they're fairly sizable given that we're only 27 days into the new year. And then he says that my favorite line is, at this rate, the NASDAQ will be at zero by July. Well, okay, end of quote, right? So, but the NASDAQ's not going to zero, but it can certainly feel like it, right? It feels like the world is ending. There are some tech names that are down big. So it's nice to see some of them beat earnings, and hopefully that will stop the selling that's out there.
Last question. How far do you think the markets will drop, or do you think the sell-off is over?
Well, I think the argument here, or the discussion, or the thought process, I guess, maybe of how to perceive how far the market's going to fall, and I'll switch over to a different screen. Again, this is the 1-year S&P 500 chart that you see here. And again, in that upper right-hand corner, I know you probably see Allison and my pictures up there, but you can see that we've spent about 4 days in that same congestion area. Here, I'll use the mouse. So right in this area, right? So, technically, are we forming a bottom that we can now go higher from? Maybe. It's certainly a good sign for that, if you will. All the trend lines are up. So, yep, we sold off, 10 to 14%, depending on your exposure to technology. But now, is this the new bottom to which we climb from? I think there's a good chance of that. And I was having this discussion with the client last night. And so markets don't like uncertainty. So what has been the uncertainty of 2022? Inflation and the Federal Reserve. So the Federal Reserve was very clear this week. I didn't really like what he said, but Chairman Powell, the chairman of the Federal Reserve, I didn't like what he said, but what he said, he was unequivocal how he said it. He said, we are going to have 3 rate hikes this year. And we're going to do what we need to tame inflation. So giving what I think he gave the market there is some certainty. So in that case, I am hopeful. I'm leery that, in case I'm wrong, of course, but hopeful that the bottom is in here, and that the 10 to 14% sell-off we've seen across the markets has really just been us pricing in that Fed rate hike. So now that we know what's supposed to happen, if it happens on schedule, the 3 rate hikes, then the market continue to kind of build on itself and go higher. However, if like I've said all along, I'm not sure the Fed has the stomach to raise rates. If they don't raise rates, now you're going to see the market turn around and scream back higher, or if they choose not to raise rates. So that's where I think we are. No crystal ball in the investing world, of course. But I like the way we're set up to continue to actually stop the bleeding in the market and continue to recover, especially in the technology names.
Thank you, Steve, for your commentary and analysis. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.
All right. Thanks, everyone.